Gas, natural gas.
It is Thursday.
Right.
So, it is 10:23 in the morning. Let's jump over to the NADEX platform. We get our natural gas numbers every Thursday, 10:30 a.m. The EIA publishes those inventory numbers. And so we got about 6 minutes until the numbers come out. We got the July contract up here. We're looking at natural gas. We're trading at 295.88. Quite a little acceleration in the last couple hours, right? Right from 290 all the way to 298, man. That's a big move.
8 pennies is a lot. That's $800 move
in the futures contract, right. Sure. So let's take a look. We like to set up possible volatility trades. We're going to get the numbers in 6 minutes. We have the various spreads over here that we're looking at, commodity spreads, and I'm going to start things off with the 11 a.m. expirations, all right, shortest time frame expiration. And what's nice is we took a glimpse at these during the commercial break. So contract is trading just above 295. And what's nice is the 11 o'clock expirations, the 12 o'clock expirations have 295 kind of as your pivot point.
Right,
so you can set up
which is really great.
Yeah, because we're not going to be paying a lot of intrinsic value on either side, right? It's just going to be kind of a volatility trade, just trying to pay as little as we can for premium, looking for a pop. Bless you.
Excuse me.
In either direction. So pulling this up, now immediately what I'm seeing is, and sometimes, oh, bless you, get it out of there. There we go. So the bid-offer spread is a little wide on these 11 a.m.s, all right? Right now it's trading at 296, but
Look at that.
and you can put in, you can become the market, all right? But I want to get a trade-off maybe. So, so you know, the lowest priced offer right now is 298, and I'm not willing to pay 298 if the contract's at 296. So I'm going to jump right to the 12 o'clocks and see how these line up, all right? Now, it's right away, and this is where you just want to be used to these markets. This is why we go through it, you know, open a demo account so you can become familiar. Because the 11 a.m.s had 298 as the offer. Right. Well, we gain an extra hour, and we can get in at 297.
Exactly.
Okay, so that's
and it was just 296 something. It just flipped.
So it's ticked up even, right? So this would be our bullish spread, 295 up to 315. This is going to be your bearish spread, 295 down to 275. We're going to be buying the bullish spread. We're going to be selling the bearish spread. And we're going to have about 12 ticks or $12 of intrinsic value on the positive side, all right? And yeah, not a bad trade, right? And this is why I say we have $12 of intrinsic value. Well, guess what the difference is in the two contracts? The $12 of intrinsic value, and you're paying about $8 in premium over here. You're paying the same $8 in premium over here, except you're just not paying for that intrinsic value, which is why it's so nice when they line up close to that pivot point.
You're not kidding.
So, and as we're speaking, it's climbing higher coming into these news numbers. So recalibrating it again, this one gets a little bit more expensive. You still have about the $8 of premium in the out-of-the-money bearish spread. So you're looking at about $29, $28, $29, call it with commissions, $30, which represents 3 pennies that you would need away from $295 to become your break-even.
That's a nice setup, man.
Yeah, especially when you just got the type of move we got, right? And talk about oil's moving, gas is moving. So we'll come back. We get those numbers in 3 minutes from right now, and we'll see if we get 3 pennies of movement or not. And like we always say, you can make one side of that trade too. You know, you could just be an out-of-the-money $8 trade. We'll see what happens.
Stay right there, folks. Tommy and I coming right back. Dow's up 100, NASDAQ's down 34, S&P's are up flat, actually. Bring right back. Welcome back, folks. Natural gas. Now, this is, you talk about, we had just brought up the Bloomberg estimate. It was 92 BCF.
Yeah. And what's the number?
92 BCF.
92 BCF.
Now, let's see what the market thinks about it.
That's right. So Bloomberg users on the ball. And the market reacting pretty tamely as it comes in right in expectation.
That's crazy.
Yeah, so we're trading basically 296 when we set up this trade. Prior to the news, we're trading at 296.15 on the news.
Look at that.
We're less than a minute after the numbers. We might see some acceleration one way or the other, and as we speak, trading up a few ticks.
That's unusual that we see no movement.
Yeah, I agree. Even when it comes in expectation-wise, you see just some more volatility. It doesn't mean maybe just a spike higher and lower, right? Trying to find where that bid offer is gonna rest.
That's amazing.
And as we say, so ticking under 296. So if you had taken this trade, you have value away from 295, right? 295 becomes kind of your max loss there because you have a volatility trade where you have exposure to the upside, exposure to the downside. So you don't want to see this navigate back to 295. You want to see it go one way or the other. But as we speak, accelerating a bit.
No, there we go.
Give it some time. Give it some time. So,
so what we're looking at, folks, is that they start driving it down, and it's almost one of these deals that, well, it didn't move. It didn't go up, and so the market's probably looking and say, okay, well, no one's buying it. Well, I might as well sell it.
Sure, sure.
You know, if there's no demand. But this is really unusual that you don't get movement at all. But
well, we're past that already. Right now we have some movement.
Right,
we're down about 1.5 pennies, approaching 2 pennies to the downside. And you know,
and you need we need 3 pennies away from 295
for both of those trades. Now, you know, as I said, coming towards the tail end of that segment, though, you can always trade one side of this, and the bearish side of this, because it was out of the money, it was only going to be an $8 trade, which basically represents 8 ticks. This ticks in 1/10 of a penny. So basically, your break even on the bearish one became 1 penny under 295 if you had made that trade.
Right.
Which, I mean, you know, already we're half a penny, but you can see how with that little risk reward, if you get a move in your direction, you're directionally biased, and you happen to be in the right direction, things can really accelerate. So we'll check back in. Nothing too dramatic. And just to jump back to the Bloomberg news, because I was curious how. Let's see the tables. There we go. Yeah. So where are we? Where in the country are we going? Right.
Yeah.
So this is going back each week, and then you have the East, Midwest, Mountain, and so pretty even as in where the stockpiles are across. You know, 351. I think this is billion. Okay, figures are in billions cubic feet. BCFs. Yeah, 351 BCFs in the East. Midwest right there, you know.
Yep, 341.
Yeah, and I wonder if they get into the demand in here as well, because no, not quite. Because it is interesting that as they come out with these numbers, the EIA, we do natural gas Thursdays, 10:30. Wednesdays, we get oil.
Yeah.
There's a lot more contained than just that headline number, which is the big number that always comes out. But they talk about whether it's where the demand is in the country, stockpiles.
Yeah, we can see that. So the build is coming up slow because see the weekly net change?
Yes.
That's, you know, there's only just small numbers, 23, 26, 8 in the mountain region.
And that's where you get the 92 billion cubic feet that the top line number is,
and then look at a year ago. With that, I wonder if that's the amount. Oh, that's probably the full amount.
That is the full amount, and this is where we sit currently. That is our full amount currently. All right, so 5-year average, we're looking at 2.3.
Yeah. So we're below that.
Yeah,
1.8.
and we're below that currently at this time. Yeah, and just check back in since we'll see where this market is before we jump away from it. So just hanging at about 294.5.
Well, this might get some action here.
We're about 2 pennies below where we were trading at prior to that news. So
drilling that swing point from this morning.
And you would have until noon on these trades before expiration.
Wow.
So we'll see what happens.
Yeah.
Let's check back in on natural gas one more time for the hour. So we're approaching the end of the 11 o'clock hour. And if we had made that volatility trade, we're almost at max pain, man.
Right.
295. But
I think we get to noon, though.
We do have till noon.
Okay,
so you'd have a full other hour, and you're getting some volatility, and it's bouncing around a bit. But anytime you're making that volatility trade, you want to see a miss in the numbers, right? You don't want to see a peg on the numbers. So if you were making this trade, you might have been looking for the opportunity to take any value, right? Because for instance, there's our bearish spread, all right? So when it ticks down to 294, maybe you take that opportunity to close out your bearish spread for value, right? And then you wait for the bullish spread. Well, guess what? Now the bullish spread is back up there. Maybe you look to take some value off there.
Break even,
We only put up about 3 pennies as in the price of the contract. You're looking at $30. So if you can get a penny and a half in either direction, you got your investment back. So that's where it's kind of cool that you can manage this trade. You know, you get an initial spike one way or the other. You can always take it off. But the number came in right as expectation, and the market is okay with that, it seems. 295 is where we sit. We'll see. You would have that extra hour. So you never know, man. Oil yesterday spiked down.
Came all the way back.
It's already back up to where we were after a 4 million barrel miss.
Pretty amazing.
It is.
Pretty amazing.